Cramer, why you should use your mad money to buy some individual stocks here. Investors should think about buying some individual stocks as about $1 trillion worth of companies are due to go public, CNBC's Jim Cramer said Thursday. Index funds, as promoted by the late John Bogle, typically beat most individual money managers in the long run, but Cramer said some stocks are popping as the major averages make little noise. The top U.S. indexes all rose about 0.30% on the session. Starting. Cramer recalled that some cloud stocks popped dramatically when they went public, and that investors made money off of Twitter's and even Facebook's IPOs. There has not been big names such as LYFT, Airbnb, and Uber are in the lineup this year. Brokers try to they. Additionally, investors can own some individual stocks to buy and sell after doing homework on the companies, he said. These stocks can be. The host highlighted that PVH popped nearly 15%, Lululemon spiked more than 14%, and Five Below climbed above 8% in Thursday's session. He said the stock. He recalled lessons he learned from investors David Darst, who is a frequent CNBC guest, and Peter Lynch, the former manager of the Magellan Fund at Fidelity. David. PVH, which owns fashion brands such as Tommy Hilfiger and Calvin Klein, was a buy because its CEO Manny Chirico is dependable and has been working on the one division that gave it a shortfall, he said. Five Below, a growing discount store concept, is expanding nationally, which Lynch has written is a big reason to buy a stock, Cramer said. Lululemon is a good buy just by doing some research, he added. Again. Disclosure: Cramer's charitable trust owns shares of Five Below. Questions for Cramer? Call Cramer 1-800-743-CNBC. Want to take a deep dive into Cramer's world? Hit him up. Questions, comments, suggestions for the mat.
Raindrop, drop top, smoking, no cooking the hot pot. Fucking on your bitch, yeah, that. Looking up, open the park, pot.